All right. Good morning. How you guys doing this morning? It is 25 minutes after the bell, after the hour, and the bell starts. We're going to watch the ponies run right after the morning bell here in about 4 minutes. So we're about 4 minutes away from the market open. Nice to see you guys all here. We got a nice following, a group of people, a group of guys who likes to come and hang out in the morning and watch the ponies run. So let's talk a little bit. We get new people every day. I've been watching the YouTube statistics, and it says that we get new people joining us every day. So for those of you who have heard me, have been here and are regulars, if I reiterate myself and say the same things once in a while in the mornings, then just kind of bear with me as we introduce new people who are joining our little club here. And let me introduce a little bit about what we're doing, who I am, and why we're here for the new people. And then there are those of you who have been here, just kind of suffer through my little introduction in the mornings. Up in the upper left-hand corner, we have the S&P 500. In the upper right-hand corner, we have the Dow 30. So down in the bottom left-hand corner, we have the Russell 2000. And then in the bottom right-hand corner, we're watching the NASDAQ. Now we're over on the futures market, just to give you a little bit of put a little banner up here to let you see. You can read that as I'm talking about the markets, but we are in the futures market out of Chicago. A lot of people don't realize that you have multiple exchanges in the U.S. We have 3 primary exchanges over in New York. We have the New York Stock Exchange, we have the Amex, and we also have the NASDAQ. Those are 3 exchanges that you can trade through. Of course, most of the time software that you're using just kind of, puts those all together, and you pull up a stock, and you don't realize that you're going through one exchange or another when you're in the stock market. You're going through different exchanges based on which exchange that stock is being traded on. Well, we also have different exchanges over in Chicago. So there's a couple of exchanges over there that we primarily trade through. There's more than 2, but I'm just going to mention the 2. There's a couple of grain exchanges, but we've got the Chicago Mercantile Exchange, and we've also got the Chicago Board of Trade. Now, those used to be competitors, and we had the 2 exchanges over in Chicago, and the Chicago Mercantile Exchange bought the Chicago Board of Trade. So they're kind of 2 companies, but owned by the same company. That makes sense. So we've got the exchanges out of Chicago. Now, a lot of people don't realize you could even trade through exchanges in Chicago. Now, that's called the futures market or the commodities market over in Chicago. Now, a lot of people have heard of trading commodities, but they don't realize that they're actually traded out of different exchanges out of a different city, not in New York. They're traded in Chicago. And again, to trade them, you need different software. And so we're using Track and Trade. This is a 7-time Stocks and Commodities Annual Reader's Choice Award-winning platform. And so this is the software that we're using to trade the Chicago exchanges and trade the futures market. But over in the futures market, you have the Dow, the S&P, the Russell, and the NASDAQ. These are markets that you can trade. These are indexes of the stock market. Now, even though we're in Chicago, we are trading stock indexes. All right. So there's a number of things, of course, that you can trade. You can trade commodities. You can trade crude oil, orange juice, pork bellies. Actually, we can't trade pork bellies anymore. They delisted pork bellies, but there's all kinds of fun things, cotton and sugar. And there's actually an ICE exchange out of New York that has most of the softs on there, we call them. But there's crude oil, and there's copper and gold and silver and, all kinds of fun things, soybeans and soybean meal and soybean oil. And there's all kinds of fun commodities that we can trade as well. And we'll kind of, as we move through time, as you join us in these classes, you'll see us go and look at some of these other things. But right now, the New York markets are getting ready to open. And it looks like they just opened because the market's going crazy, right? So the market's going crazy, and that's what we're kind of here to watch. We kind of like to watch in the Chicago exchanges. We like to watch the New York Open of the indexes. So these are stock indexes being traded in Chicago. And so they have a New York Open. Now in Chicago, look at this. Look at the Russell down there on the bottom. Now I know that we got some guys in here who love to trade the Russell. They love to grab that opening bell Russell and bam, they're going to take off. I'll bet Matt's already long. So we're going to watch these guys take off. Now again, I'm going to turn this off so we can see a little better. But this is these are the New York indexes trading in Chicago. It's kind of a weird thing to think about, but the stock exchange indexes are being traded out of Chicago, and we trade in Chicago. We trade 23 hours a day. So this is the open of New York being, you can being seeing that what's happening to that over here in Chicago. So again, we trade 23 hours a day in Chicago. So these things don't really have an open close in the morning like the New York Stock Exchange does. These markets actually close at 3 o'clock in the afternoon, my time, here in the Chicago Exchange. So we're just watching the morning bell over in New York through the Chicago exchanges. Kind of a fun little way of doing things. But the markets kind of go crazy. So you have the pre-market session, and then you have the opening bell, and the markets go a little bit crazy. And it's fun to watch these things take off. And so that's what we do here in the morning. And then, of course, I teach classes at the university. So I'm a former instructor of trading over at the Mercantile Exchange and at the Board of Trade. And so I like to come and watch the morning bell with you guys. And I think that's a lot of fun, watch these markets take off. Sometimes, we'll take some trades, but mostly we're here for education. We're here to teach and learn. I teach classes at the university. And tonight I start my new class. I start my university advanced class. And so the advanced class starts tonight. And so in this past couple of weeks, we've been about 2 months, I've been doing this. And my classes started last week. And we started the introduction to day trading class. And now we're going in starting tonight. We're going to start the advanced day trading class. So in the advanced day trading class, this is kind of the lab for those classes that I teach at the university. All right. So I teach those classes at the university, and then I come here and kind of trade and work with the new instructors, or the new instructors and the new students. And so the new students are going to be coming here. We got the previous students, the ones who were in the beginner class. We got a lot of those guys are here now, and then in the class. And then, of course, anybody who's on YouTube that wants to can come and join us. And then tonight we start the advanced class. Now, what is the difference between the beginner class and the advanced class? Well, the beginner class, we just start getting introduced to the markets. Okay, we just get introduced to the concept of day trading. What is it? It's taking positions throughout the day. There's different kinds of trading. There's scalping. You can take very short position trades, or very short trades, like maybe 2 bars. Maybe Matt's in here. Matt's an experienced trader. He's one of our members. Is Matt here? Yeah, he's here today. There's Matt. Happy Monday, Matt. Hope you're making some money already. Matt's an experienced trader, been in trading for a while, trades for a living. So we've got John Mackey's in the house. Glad to have you, John. We've got Gary Thomas in the house. The computer, YouTube tells me we've actually got a whole bunch of people in here, but not everybody's saying hi. But it's nice to have you guys, some of you guys. Michael Bruce is in the house. Glad to have you, Michael. Good to see you in class today. So we got Steve W53. Good morning, Steve. It's glad to have you in the house. Anybody else that's here wants to say hi? We'll throw your name up on the board and let everybody see who's all here in class with us. Like I said, the YouTube thing tells me that there's a whole bunch of people in here watching, but we've got kind of there's G Wiz. He's in the house today. So it's nice to have everybody. We don't have just this class isn't just exclusive for my university students. Look at the NASDAQ, guys. That thing's taken off like crazy. The Russell kind of died a little bit there. Usually the Russell, we kind of get a good little move out of it. But it's kind of slowing down a little bit right now. The big one's the NASDAQ. The NASDAQ's making a big move here. The S&P's doing about the same. The Dow, a little bit indecisive. Dow always seems to be a little bit indecisive. Russell's the one that usually, look, right here's a buy signal, opportunity to get long for those of you who want to see if this market's going to continue the rally on this opening bell. I don't oftentimes trade the opening bell because it gets a little crazy, with a lot of indecision, market bouncing up, bouncing down. I kind of set aside and watch this for the first 5, 10, 15 minutes and see what's happening. We're gonna get into the automation side of class this week. So this week, going into the advanced day trading class, we're going to start talking about automation. And here today, we're going to just kind of introduce you to what I call the Q-OCO, or the semi-automatic trading strategies. It's kind of what we've been using for the most part the last couple of weeks when you're here in the class with me, learning how to trade. We've been using a lot of the semi-automatic tools and the manual tools. So we have manual trading, we have semi-automatic trading, and we have fully automatic trading. So there's no right answer. A lot of people ask me, well, what's the best, Lance? Should I be doing manual trading? Should I be using semi-automatic trading? Should I be using fully automatic trading? And it's really up to you and your lifestyle and what you want to do and how much you trust the computer to do the trading for you versus you getting involved. And there's just lots of different combinations of doing automated trading. But the most important thing is that you can't automate something that you don't have. So you can't automate a trading system if you don't have a trading system. So we have to have a trading system to automate. And that's kind of what we've been working on the last couple of weeks, right? We've been working on coming up with a trading strategy. Now, I share my trading strategy with you, of course, but there's lots of trading strategies. And, in the software, the software comes with, dozens and dozens and dozens of trading strategies or trading systems. And then you can set up lots of different ways of trading those trading systems. So there's millions of combinations, and you have to decide which one works best for you. You can practice with a bunch. I'm going to give you my favorites, and just again, I'm not here to tell you how to trade. I'm telling you how I like to trade, and then you can adapt to your own trading strategy and style. Now, of course, I'm very conservative in these classes because I'm teaching brand new people how to trade, and I want to be very, very conservative. And so taking one or two trades in the morning is really all I really want to do. I kind of want to teach new traders that the name of the game is not to overtrade, not to get in. A lot of people think day trading is, I got to be in 100 times in the first minute. That's day trading. No, that's not day trading. That's ridiculousness, thinking that you need to get in that often and out, in and out, in and out, in and out 100 times in 5 minutes. That's not a wise way to trade. What we want to do is we want to catch a trend. Now, this NASDAQ, beautiful market this morning. Holy cow, what a beautiful market. So we got our little signal from the opening bell, and that thing's just been going straight up. Okay, it's going straight up. And so the S&P too got a little signal from our opening bell. Usually we like that Russell. That Russell down there oftentimes is the one that kind of trends nicely in the morning, and it's kind of started to rally up, and it's failed a little bit here, but it's starting to go down now. And these indexes, sometimes they all go together. They like to do what I call porpoising, which is they all kind of trend together. Now, the one down there in the left corner, little cousin Russell, he sometimes does different things than everybody else. And the reason is because up in the upper left-hand corner, we have the S&P 500, right? That's the 500 best stocks of the S&P, okay? Standard and Poor's 500. And then we have the Dow Jones Industrial Average, the 30 Dow. So those are 30 stocks. So the S&P and the Dow, those are large cap stocks. And then down in the bottom right corner, that's the NASDAQ. And these are the best 100 stocks, that are on the NASDAQ exchange. All right. So there's a lot of crossover between what's in the S&P, the Dow, and the NASDAQ. Most of the stocks that are in the NASDAQ 100 are also in the Dow, also in the S&P. So you have a lot of crossover. But yet you've got different ones that are not in those. But those are all large cap stocks. Down in the bottom left corner, that's Russell. Little cousin Russell down there, 2,000 small cap stocks. That's what that is. That's why little cousin Russell oftentimes does something different than the large caps. And so we kind of keep that in mind, that little cousin Russell, he down there, he does his own thing oftentimes and doesn't follow the other three large cap stocks. But eventually he will. He'll kind of kick in, and then all four of the markets kind of move together. You're like, well, if they all four move together, why don't you just focus on one? Well, because usually we have a lagger or two. Usually one market will be the leader and it'll take off first, and then the others will follow. And so we can trade the laggers. We can trade the ones that follow. So it's like the leader is our indicator that says, hey, the market's bullish. And then the others will go slower, and we can take one of those and trade those. And usually it's a good indication which direction the market's going to go. So I like to watch all four markets here in the morning, and we'll kind of pair off and maybe in the afternoon do a little bit less four market thing. But in the morning and the morning bell, we like to watch all four markets. And for the most part, in the morning, we just manually trade them. We're not trying to set up some kind of automated system to trade these indexes in the morning, because they jump all over the place and go crazy, and you get whipsawed in and out a lot of times. And the AI system, as it's watching how to trade, the it's kind of gets jumped in and out of the market a lot, and so it's a little bit tumultuous. I don't know what word I'm trying to say. I got my tea here today. Been losing my voice every morning, and I took an allergy pill, and it cleared me right up. So allergies are kicking in this fall as the fall weather's coming. Got me some hot apple tea. All right, there's a buy signal on the NASDAQ. All right, we're going across the NASDAQ. It's breaking the first green candle to make a new high. So this is an ABC pattern that we're looking for, right? Down here on the bottom right-hand corner, guys. So we got this thing coming in here. This is a little, what we call a little wedge or pennant formation. It's called a flag. So if we got any strength in the market, this should continue higher. Now, this is going to be a big indication of how strong this market is, or it's called the follow through, right? So is this market going to follow through and continue higher? If it does, then we got a nice, strong, trending market. Oh, look at Cousin Russell, man alive, dropping like a rock. We got some more guys showing up in here. We got Kurt. Nice to see you, Kurt. Welcome to the club. We got Oliver's here. Nice to have you. Frankfurt's in the house. Frankfurt, Oliver. And are you from Frankfurt, Germany? I kind of got Michael Bruce, who is from... Michael Bruce, you're going to have to remind me once again. You're from island country. And then we got Steve Scott's in the house. Steve Scott is one of our President's Club members. So he's been with us for some time. And then we've got John David Lundberg, Utah Tech class member here. Way to go, John. Nice to see you. We got Oliver Orman. So nice to have you guys. Oliver says, I talked to you when I was in Colombia, the Emerald guy. Oh, the Emerald guy. Oh, yeah. I remember that conversation, Oliver. Nice to have you in the class, man. This makes it easier for you. Come all the way from Colombia and able to join us through the YouTubes. So this pattern right here should not have failed. All right. So that shows a little bit of weakness in this market. The market's slowing down a little bit. So generally, I'll say that these number one patterns that we have first thing in the morning like this, they should not fail. They should not fail. This should have been a follow through. That first green candle to make a new high should not have failed. And it did. It failed. So this is actually making a second follow-up pattern. So what we're going to see is we're going to see this market probably drift lower. I call it the drift pattern now. So it's coming up. We have our first rally, pull back. The two bars did not break the yellow dots, which is an average true range. And then the green bar breaks the previous red bar, and it should have rallied, and it should have taken off, and it should have showed great strength and coming up and making an ABC continuation formation. Where it didn't, it's coming back and it's showing weakness. All right. So we're going to get a second shot at this. It's going to try to go up one more time, usually. Now, the market doesn't ever have to do anything we think it's going to do. It can do whatever it wants. But we're going to think that this market's going to try and make a second attempt at going higher. Well, it depends on how far back it goes. But this green candle right here is another signal bar now. So if it breaks above that green candle, that would be another pattern higher. But it's breaking it to the downside. This bar right here is kind of breaking that rule right now. It's coming back too far. Okay, so now look at what's happening here on the Russell. So the Russell's making a pattern that we call the Fibonacci bow tie. All right, it goes up, comes back up, and it makes a bow tie where it crosses off like that. All right, so that's the bow tie pattern. So that's kind of a little pattern that comes in here. So it uses support as resistance. So we start watching for that. You kind of have a little one right here on the NASDAQ, little bow tie pattern now coming in here. It comes back and it goes back to the A point. Okay, and so that's what we look for. You look for the market to go up, pull back to the A point, and it should hold that as support. If it does, maybe it'll turn and break higher. So back to our trading strategy. Well, here we're getting a first green candle to make a new high on the Dow. The Dow is really indecisive. Lots of topping tails, lots of bottoming tails. Not a very clean market. So we have to wait for something. For me, and being extremely conservative, helping new traders, we want to be very careful on what trades we take. All right. So the whole idea of a new trader is you just want to get green and walk away. Just prove that you can get green. Just get a position on, get some money in there, close that position out, close it out green, and you're done. One trade is pretty much, that's all we need. So Michael Bruce is from Jamaica. He gave me the flag to help me remember. Jamaica. Nice to have you, Michael Bruce, in the house from Jamaica. All right. So let's watch these markets. Matt, have you got into the market yet this morning? Matt likes to trade the morning bell. Again, you guys who are new, just kind of sit and watch. Don't feel like you have to make a trade right now. There's lots to learn. And so we want to make sure you do it right. And right is a, kind of a, what is right? There's lots of right ways. There's lots of wrong ways. You can trade the right way and still lose money. You can trade the wrong way and still make money. So whatever is right and wrong is kind of, whatever you decide it is. So Matt is a professional trader. So I like to refer back to Matt because he does this for a living. So Matt says he took a couple shots at it in the morning. Any of them turn out for you? Are you green or red on the day right now, Matt? And were you able to lock in a little bit of profit to get green? So as a new trader, the first thing we want to do is we just kind of want to watch these morning bells and see if there's not some volatility in here that we can take advantage of, and try and get green. That's really our goal as a new trader. We're just manually trading. We're not automatic trading or automated anything. We're just kind of trying to get green, get comfortable with the concept of trading, get comfortable with the concept of making a little bit of money, and then stop trading. So don't overtrade. Don't feel like you have to jump in a million times. And David's asking, we got David in the house here, David Lundberg. What are the blue arrows? So let's talk a little bit about this because it's important. And as we lead into and go into the automation system, it's like I was trying to mention before, is that the markets, we have to automate or have a trading system, we have to have a trading system to automate, right? We can't just, the computer's smart, I'll just turn it on and it'll trade. No, we have to have a system. There's our buy signal getting ready to go long here on the S&P. The S&P is getting some signals right here. We draw that trend line down there right there. That would be a move going long on the S&P. First green candle to break a new high. It's breaking above that average true range right now. So that would be, we'd look for some follow through on here. I like to wait for the market to break those yellow arrows when we're manually trading. See it pull back a little bit. I want to see like 3 or 4 green candles and then a little pullback and then a continuation. Get that little hesitation in the trend and then prove to me that you want to be bullish and continue higher. So we'll wait for that. And that's kind of what we're seeing right here on the Russell, isn't it? The Russell's starting to rally. So the Russell's kind of got that little trend line going. We got the Dow's trying to get a little rally out of here. So we can bracket these markets. So David, John David, we want to bracket these markets so we get kind of a high and a low of the day, so we can kind of see where our areas of support and resistance are. Those are indications whether the market is bullish or bearish. So there's a number of ways to determine that. And since we're just working on a 1-minute chart here on the YouTubes, all I can do is show you one of my screens. All right. But I have multiple screens. I have screens up here. I have screens down here. I have screens down here. And so you can see other charts. You can use other charts to help you identify bullish, bearish trends. And so I'll have a long-term chart over here that's got 4 charts of the S&P, the Dow, the Russell, and the NASDAQ. And those are 2-minute charts. So a 2-minute chart is my long-term chart that helps me identify, and I use an indicator called the bulls and bears. And I use that indicator on this other screen to help me know whether the market's bullish or bearish. But we can also do that on the 1-minute chart using just simple moving averages. And so, John David, that's what those are. Those are just those blue arrows come from the simple moving averages that I have on the screen. So if you look up in the upper left-hand corner of any chart, it tells you what indicators I have turned on. So I have all that turned on for you so you can see what I'm using. So I'm not hiding anything from you. So you have the moving averages. So you can notice I have a 3-period simple moving average and I have a 28-period simple moving average. Sometimes we'll use a 50-period moving average, but 28 is a little bit more aggressive. So in the morning session right now, we're just using the 28 period moving average. Now the 3 period moving average is basically just a real tight, it's just price. That's all it is, right? It's a three price bar moving average of price. And so that's just really tightly, just price. So if we were just to turn off the price bars and just use a clothesline, you would see basically the same thing as a 3 period moving average. So we have a 28 period moving average, I have a 3 period moving average. So as long as our arrows, our buy arrows or our sell arrows from our primary indicator, which is the ATR, the average true range, is above the red line, or in this case, the 28 period moving average, then you are going to only take bullish positions, right? So we only take bullish positions above the red line. We only take bearish positions or go short below the red line. That's the idea of what's going on here on the screen. Now, the reason we got blue arrows is because I put that 3 period moving average on there, which is just price. So then if that crosses below, price is below the 28 period moving average. If goes above, then price is above the 28 period moving average. And that blue arrow tells you that. That's what that blue arrow is telling us. It's telling us that the market is bullish based on the 28 period moving average, or it's bearish based on the 28 period moving average. Is price below the 28 period moving average? If so, we only take yellow arrows to the short side. Is price above the 28 period moving average? If so, then we only take arrows to the upside. So that was a long way around saying that's our bullish bearish indicator. So it's telling us the market's bullish if its blue arrows are up, it's bearish if the blue arrows are down. And that's how I derived that. Again, different ways to do it. You can use a 28 period moving average, or you can use a 50 period moving average, but one or the other. Just 28 period is a little bit more aggressive. And so we're being a little bit more aggressive right now because it is the morning bell. We'll maybe loosen that up later. So now what we're looking at, see, we got the, in the case of the NASDAQ down here in the bottom right-hand corner, we're getting ready to cross above the average true range. The average true range, now these yellow arrows are not necessarily buy signals and sell signals. You can use them as buy sell signals, and the blue arrows are certainly not buy and sell signals. Those are just indications that the market's bullish or bearish. But the yellow arrows, they can be used as buy sell signals in the automated system. When we get into the autopilot, they will use that as a buy signal. You have to have an arrow for the computer to know whether the market's ready to go long or short. But for us, when we're manual trading, we can use that as just a signal that the market is bullish or bearish based on whether we got a blue arrow pointing up, a blue arrow pointing down, and then crossing the average true range tells us that the market is bullish. So you don't necessarily have to get in on the yellow arrows. You can, as long as it's above the red line or short below the red line. I hope that I have a long way of saying something simple. Kind of oftentimes trading is taking something that's very simple and complicating it. Buy low, sell high, markets go up, buy, sell at the top. But it's, all these indicators and stuff sometimes just get in the way. But to just price action, momentum price action, and that's what we're really trading. We're trading momentum price action. We're just trying to find a market that's trending and moving, and then we want to find a little hesitation in the trend, and then we want to enter our position and get in. And we just want to see the market trend. If the market's not trending, it's really hard to trade, right? We need a market that's kind of excited and moving and trending and has a reason to go somewhere. Right now, we're getting the NASDAQ looks like the best opportunity. The Dow is breaking above a previous high. It tried several times and it failed. So it's trying once again. It's going to close above. If it closes above that horizontal white line right there, that would be a signal that the market is bullish. But it's the leader. It's the first one to break the previous high. So we were looking for this. We're kind of just toying around with this, with the 28 period moving average right now down here on the NASDAQ. The Dow's the only one that's really showing some strength to the upside, but it's been so weak. Look how, it's just gone sideways. It hasn't really been trending, but it's showing a little strength. It's saying, hey, I think I want to go long today. We'll see if it holds. The NASDAQ is failing. And again, remember, these markets supposed to be traveling together. So when they're starting to do this, that's indecision across the markets. And we don't really like that. That's not something we want to see. We don't want to see the NASDAQ making signals to the downside while the Dow's making signals to the upside. That's not what we like. We want to see those two doing the same thing. and just have one lead the other one a little bit. So see how the NASDAQ is now falling out of this ABC to the downside. So we got A, B, C to the downside. We got this little shelf in here. It's showing bearishness in there. All right. It's showing that it wants to fall and drop out the bottom here. That's not good because the Dow's over here trying to show some strength. Now remember, the NASDAQ has 100 stocks in it. The Dow only has 30. So which 30, are kind of being bullish today, which ones are being bearish, and which directions are they pulling the market? This is just a lot of indecision right now. We got our bracket here from the high and the low of the day. Market sweeps up, takes out all the longs, sweeps down, takes out all the shorts, or vice versa. Sweeps up, takes out all the shorts, sweeps down, takes out all the longs. And then it kind of decides what it wants to do. So we're just kind of waiting for the market to decide what it wants to do. Now, there's also other factors that we need to take into consideration, and that's the news. So we can come in here and go to our economic calendar, and I'll just pull that onto the screen over here. Hopefully you guys can see this. So we got the economic calendar, and this is what's going on today. So 6:30 this morning, we had the New York Empire State Manufacturing Index. 8:30, which was right when the morning bell, we had Fed Harker speak. So he was speaking right as the morning bell. Oh no, 8:30. We opened the bell at 7:30. That's 7. And this is my time because I'm in Mountain Time. I'm out here in St. George, Utah, where I'm a school teacher at Utah Tech University. Used to be Dixie State University. They changed the name to Utah Tech University. So I teach at Utah Tech University, and these classes that I'm doing here online are basically for that student class. So this is the lab for that class. And so I try to teach the stuff that we teach in class. So tonight we meet in person at the university, and then I come back and the academic stuff that we learn in class, we then come and practice. So we practice what we preach here on the YouTube. And then we got Fed Harker speech at 2:30 this afternoon. So not really a lot today. These guys, they're not gonna make any real decisions like interest rate decisions. They're just going to talk, and whether they have a bullish outlook or a bearish outlook will kind of move the market a little bit. But it's these red ones that are the important ones. Like tomorrow morning at 6:30 in the morning is retail sales. So that's going to move the market if that's positive or negative. Now, a lot of people will try and interpret this. They'll come in and they'll say, okay, the previous on the retail sales was 0.6. The consensus is that it's going to be 0.3. And then we'll have the actual. So the actual will come out, and the difference between the previous and the consensus, and then, of course, you have the forecast, is whether the market's going to be bullish or bearish, and whether the market's going to rally or fall, right? Now, for us as small speculators, it's fun, but it's not for us to determine whether this is a bullish action or a bearish action, okay? You don't try and decide that. Don't sit there and say, oh, that market came out, therefore it's bullish, and therefore I'm going to go long and make millions and be rich beyond my wildest dreams because I was able to read the retail sales and it came in positive, and so the market's going to go up. That's not for us as small speculators to determine. I can't tell you how many times I have been watching the news and one of these government reports come out, and it comes out what looks to be bullish on the market, and the market flushed. All right. So it is not for us as small speculators to try and decide whether a market is bullish or bearish based on news. We don't know because we're not smart enough. All right. You have to remember, we are an ant sitting on the rump of an anteater. All right. So the market is the anteater. We are the ant sitting on its ass, and it could eat us alive just like that. And it makes the decision. Okay, the big market, the big players, the giant banks, hedge funds, those are the guys who decide whether a market is bullish and bearish based on news and whether the market's going to move one direction or the other. All we do is get on and ride. We just ride around. And whether that market is bullish or bearish is to be determined by them guys. Because the markets, we don't understand them in that type of a depth in the way that they might think the market is bullish or bearish. So we just watch the charts. And if the market comes out with a government report, we just know the market's going to move at that time. And it's going to be important for us to stay very vigilant and attentive at that time. We're not going to try and decide whether it's bullish or bearish based on the news. We're going to decide whether it's bullish or bearish based on the chart. Now I'm feeling FOMO right now because that NASDAQ just gave us another buy signal as it broke above those red lights to the upside. And that's a nice long ABC pattern reversal. And I'm anticipating a continuation of the uptrend. Okay, so it's not for us to determine on these news reports whether this market is bullish or bearish. Okay, here's this uptrend starting to go on this ABC pattern. At this point, I want to see it rally. We'll get 1, 2, 3 flat bottom bars, a little pullback or hesitation in the market, and then a break above this previous high and a continuation of the uptrend. That's what it's signaling right now. That's what it's telling us with this little pullback, this drift lower. It's a drift pattern. Okay, so we're breaking higher. Now let's have it prove to us that it wants to. We got 3 flat bottom bars, and then we're going to look for this market to continue higher. Again, with the news, we just want to know that the news is going to be active on that at that point in time, and we're going to be looking to go long or short based on what the big market players do, because positive news might come out and the market can fall because it wasn't positive enough. They thought it should have been a higher positive number. We see a positive number come out where we think, oh, that's great, we're going to go long, and then the market takes off and goes the other direction because it didn't go long enough. I mean, it wasn't positive enough. So even though it was positive, it wasn't positive enough, and the market falls and goes the other way. Or vice versa. It happens the other time. Oh, we have really bad news. So we come in, bad news. The market's going to fall. Well, no, it wasn't as bad as they thought it was going to be, so the market takes off and goes long. Happens all the time. So it's not for us to determine whether the market is going to be bullish or bearish based on the news. We just need to know that there's going to be big news event happen at 6:30 a.m. Big news is going to happen, or 8:30 a.m. Big news. And then we want to be conscious of that and watch and see which market, the direction the market goes. The big players decide it wants to go, and then we just get on and ride. That's all we can do, is we can ride. So we need to make sure that the market's in a trend, that there's something happening that's pushing the market. We know that the fundamentals drive the long-term trends. It's the technicals, the mathematical models that drive the short-term trends, and it's the mathematical models that give us the setups and the triggers for entry into these longer-term trends. Okay, so what we're looking for is setups and triggers. So the S&P right now is giving us a little setup right here. See this? See how they have the first candle to break a new high after it's rallying up, again, giving us a little rally, a little ABC pattern. And now it's coming in here. It's starting to rally. It's breaking above those yellow dots, which is just the average true range. It's just the range of the market. So it just broke above the average true range. It closed above the average true range. Therefore, it gave us a buy signal. Buy signal doesn't necessarily mean it's time to get in. It just means that the market has gone bullish based on the average true range. Now I've got the average true range. You guys who have been here with me for a little bit, you recognize, hold on a second, I got technical difficulties over here. You'll recognize that my average true range is different today. And so the average true range is different because usually I have it 1-to-1. Today I've gotten a little bit more aggressive. I put it on 1-to-2, or excuse me, 0.09. So I've dropped it down a little bit, so it's a little bit more aggressive. Look, these markets just keep failing on us. There's no trend. It's just sideways through our white bars. So that failed to follow through. A, B, C, and we wanted to see it break above the previous high and continue to rally up into 130.9, 161.8, and it didn't do it. Failed. So we got a failure on the S&P again. We got the Dow tried to break above tried to trend above that white line, didn't it? But it failed, come back down into the channel. So we're just channeling sideways right now. We're not getting really anything out of these markets. Now, these are big enough markets that, it doesn't take much of a move to make some money. But man, last Friday was a wonderful day for the Russell. A bunch of you guys in here I know, Matt, and who was the other guy? Made like $3,000 last Friday. So was it Steve? Was it you that made like $3,000? Can't remember. A couple guys picked up the Russell and it just flushed down, and they rode that thing all the way down, made a big ton of money. So that's what we're looking for. We're looking for a nice trend like that, but the markets are just kind of being indecisive. Now I'm using kind of funny charts for those guys. For those of you who aren't here with me all the time, I'm using price bars that are called the Heikin-Ashi bars. Now, Heikin-Ashi bars are not for everybody. Okay, first candle break a new high right there. Problem is it's the first break, and since the market's kind of sideways and not being real trendy, we're going to wait for it to give us like 3 flat bottom bars, and then we want to see a tiny pullback, and then we'll see it rally once again. Now you could say this is that pattern, but it's just being kind of weak right here. So we got a first rally, we got the little pullback. That would be a buy signal right there. That first candle to break a new high, and then we'd anticipate a continuation of the uptrend. But it's just not being. Look at the Dow is falling. So again, we want to see that porpoising. Nothing real strong right here. Nothing. The Dow is coming down, so maybe we'll take some short positions, but that would be going against the NASDAQ. So anyway, these candlesticks are called Heikin-Ashi, and it's a smoothing component that's added to the normal bars. And I got a little button here on my button bar that I can turn it on and off. So we'll just turn off the Heikin-Ashi. And so this is what most people see. This is just traditional candlestick charts. And so that's what most people are looking at in their charts, and that's how they see them. Whether they have all those arrows on with the ATR. Those arrows with the ATR are set to give you the average true range, including the Heikin-Ashi bars. So they're a little bit aggressive. And when you're just using the standard price bars. And if we were just going to use standard price bars, we wouldn't use that setting on the ATR. Okay, that setting is specifically for tuned in. I call it tuning it in, right? You tune in your indicators. It's kind of tuned into the Heikin-Ashi bars. So we've got this NASDAQ's trying to go long right here. So it's trying to break higher. It's showing some upside potential. And we could, take a position here and anticipate a continuation of the uptrend. If it doesn't, if it fails, it shouldn't fail. I mean, it probably will because the market's so dead and so weak, and the Dow is going down. So this is probably a stupid position to take, but we're going to take it nonetheless. We're going to see if we can't get a little bit of a rally out of this thing on this continuation. So we're looking for the market to continue up on this little 1, 2, 3 pattern. The reason this is probably a stupid move is because the Dow's tanking, so is this S&P, so is cousin Russell. And so here I am trying to go against the trend of the other 3 markets with the NASDAQ. And sure enough, it's pulling back against us. Now, there's 2 different sized markets here. This one, the Dow, the S&P, and the Russell, those are all mini accounts, okay? The one that I just traded is bottom right corner is the micro mini. So the micro mini is 10 times smaller than the Dow. Had I just done that trade on the regular mini NASDAQ, you see that I just lost $23 trying to get in a long position, see if this thing wasn't going to rally higher. That was a dumb move. But I only lost $23 because I'm trading on the micro mini. Had I been trading on the regular mini NASDAQ and not the micro mini, that would have been $230 loss. All right. But of course, when you do it right and you make money, it's $230 win on that tiny little move. So you have to decide what your tolerance is and where you're going to decide you want to trade. But see that's a nice little ABC pattern, and that shouldn't have failed on us. It's up, down, first green candle to break a new high. We'd expect it to continue to rally, but it's just too weak. The market's got no strength in it. So now the Dow's showing strong. Okay, let's look at this. Now the market's coming down. We got a perfect little ABC to the downside, didn't we? Where were we? We were talking about candlestick charts. So there's our drop off this, the pullback, and then it turned and it broke and it fell. First red candle to make a new low. That would have been a nice little buy it sell signal right there, and down it goes. So you're below the market. So you're below the 28 period moving average, barely, but there's your arrow to the downside. You got an arrow to the downside on the ATR, and then this is the little pullback, 2-bar pullback goes green, and then the first red candle to make a new low, and down it went. So that would have been a nice signal. Of course, we didn't take it. We were looking for the market to go up, weren't we? So we were looking for the market to go up. But those arrows tell you which direction to expect the market to go. I just wasn't paying much attention to them. Now, here we're above the red line, right? So we're bullish on the NASDAQ. We tried to take the first attempt right there, and it failed. Now it's trying to do it again. So we got the first green candle to make a new high. We are above the red line. We are bullish on the arrows. So both arrows pointing up. So that's bullish, indicating that this market should continue to rally. Look at the S&P, or the Cousin Russell down here. Cousin Russell's breaking the green bars right now, or the yellow bars. But notice that we're 2 down arrows on the Russell. So we've got our 28-period moving average. We're below the 28-period moving average. We got the yellow arrow pointing down, which is telling us that the market is below the average true range, and it's trying to turn and start to go up again. So as it's turning, it's trying to go up again. It's trying to go from bearish to bullish. And so we're getting the first green candle to break a new high above the average true range. Now you could take that right there. Boom. Get in right there if you would like. That's a buy signal to the long side on the Russell. Those are oftentimes very good patterns. They're good runs. And you can get in, you'd put your order in, you'd put your trailing stop on the yellow dot, and then just let it go. That would be a day trade. All right. We'd anticipate a continuation of the uptrend. In fact, we could probably go ahead. I'm going to give it a second. I want to see it pull back just a little bit. I like to see it once it first does that. And the problem is we're still, we haven't crossed over that 28-period moving average. It's just that when the 28-period moving average is just going sideways, usually I tell people don't trade. It's just snaking back and forth across that 28-period moving average. We need to see it prove profitability. We need to see it prove the break. Now all the markets are starting to run. Okay, so now we're getting some porpoising. We got the NASDAQ is starting to go. We got the Dow is starting to go. We got the S&P starting to go. We got Cousin Russell down here is trying to start to go. Now what we want to do is we want to see prove bullishness above the average true range, above the moving average, give it a little flag, a little pullback, and an opportunity to get a first green candle to make a new high, or a new little, what we call flagging formation, in the market, away it goes. So we tried on this one down here on the NASDAQ. We tried to get that first break and it didn't go. It went on the second one. So we were a little bit early trying to get in on that trade to go to the long side. We missed it. That happens sometimes. So just be patient. We're not even into this day. We've got 7 hours of trading and we're only into it 45 minutes. Don't feel bad that you haven't got a trade off. Don't feel bad that you're lost a little money, made a little money right now. Just, we're kind of sitting and waiting for the market to do something that looks good for us. And we're learning too. We're just kind of learning. And, going back to what John David was asking, we're trying to determine what our system is. So we can't automate a system if we don't have a system. So our system is based on those red and those yellow arrows and the blue arrows. That would be an automated system. There we go. Now we're starting to get some action in this market. People are starting to decide that they want to be bullish on this market. It's finally breaking above our white line. We're starting to get some bullish trends. This is nice. Don't feel bad that you didn't catch this initially. We could have been long right off of this ABC down here on Cousin Russell. But, people like Matt are going to be able to catch things like that because, he's really a smart trader. But for some of the new guys, don't feel bad that you didn't catch these initial moves. Just kind of wait, make sure the market's moving in your favor, being a little bit more decisive. It was a little indecisive down there, so just give it a second. It'll give you something that you can look into. So what we want to see now is we want to see a continuation. We're getting a nice rally, 1, 2, 3, 4 bars. Usually we get 4 flat bottom bars, then we'll get a little flag, and then the market will continue higher. So there's, on the Russell, we got 5 flat bottom bars, 1, 2, 3, 4, 5. That's a beautiful little start to a trend. That's your A drive. Okay, that's the A drive of the fractal trend. So now we're going to look for this market to give a little pullback. So here we are, and we don't want the market to turn and break below those yellow dots. If it breaks below the yellow dots, that screws everything up. But we're still going to look for it to be bullish because it's above the 28-period moving average. So the market's starting to show some bullish signs. So this is getting us excited. And we're thinking, okay, where's our opportunity to get in? Now it's proved that it wants to be bullish. Where's our opportunity to get in? We got 4 markets that we can trade here. We just wait for one of them to give us a signal that we can use to go along the market. And this signal to go along the market, if we get one on a little flag, should not fail. If it does, then the market again is starting to go snaky and too weak to trade. But we want to see a continuation pattern. So we want to see a flag right there. There's your buy signal on the Russell. So not necessarily because it didn't close, but I'm going to take that position as if it's breaking above the previous high. Definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. The S&P is giving us higher highs right now. So it went up, bullish. It right here, it hesitated right here, lower high, right? Definition of an uptrend, higher highs. So now it's breaking, it's making higher highs. Now we need it to follow through. If it fails, then you just get right back out again because it's showing weakness. It's not strength. We need it to decisively move in our favor once we get that signal. Now here we're coming in with 2 red bars on the NASDAQ. So the NASDAQ, we're going to anticipate this thing break the first green candle to break a new high. It's trying to break above that previous high. It's getting stalled out right here. This is a strong area of resistance, and that's why we're having a struggle breakthrough right there. But if it can break through and hold above it, that would be a nice move. Okay, we're making, well, we tried to make a little bit of money over here on the Russell, and it's starting to show weakness again. Come on, we need it to push through. I'm just going to put this order right here. I'm just going to trail on those yellow dots. So the ATR, we're just going to trail those ATR dots. If it breaks those ATR dots, then we get out. We, again, take another small loss. We just got to catch a trend. That's what we need to do. We just, it's like fishing. Sometimes we catch little fish. Sometimes we catch big fish. Sometimes we get our bait taken. So here we are. We're trying to break. There we go. We can go long right there on the NASDAQ as it breaks those red bars and tries to go higher. Now, the question is, do you want to get in with a lot of contracts and take a small trade? Or do you want to get in with a few contracts, like maybe 1 or 2, and look for a longer trade? So that's always the age-old question. What's better? Well, it's more likely you're going to catch a lot of short fish, a lot of small fish. A lot of small fish, a lot easier to catch than big fish. Big fish, very rare. So that's called scalping. If you're just going to try and take short trades, little small moves in the market with a larger quantity size, then that's called scalping, and you're just going for a smaller move in the market. Now this market's just dying on us again, so that's disappointing. We just got stopped out again for another loss on the NASDAQ. We're still in on the Russell, but come on, where's our flat bottom bars? Let's get in there. Let's make some money. Now the Dow and the S&P are showing strength. What's wrong with little cousin Russell down here and the NASDAQ? We're going to try and get in on the NASDAQ again. We got stopped out on it as it turned and started to fall once again. I don't want that to trail. I just want it to sit there for right now. Just let it go. And we'll put it on that. We can come in here and we'll put it on those yellow dots. We'll just say, if you catch up to us, just trail on the yellow dots. So now we need to see some strength in the market. So the Russell starting to move in our favor a little bit. Matt, are you in on this? Oliver picked up a couple $100 on the Russell. Nice move. Nice move, Oliver. Way to go. Steve says no, he's not doing it right now. Okay, we're trying to break. We got the first 4 rally bars. Prove that the market wanted to be bullish. We got a little pullback. Give us an opportunity to get in. Now we're looking for the market to go again. We're going to let this NASDAQ go. We're going to see if it won't run a little bit. It could have taken my profit right there on the NASDAQ, but I just moved my profit-taking limit order away. See if we can't get a little bit longer trend. It's starting to show a little strength in there to the upside. Now it's trying to break above this previous high. This is a bad zone right here. I have to be very careful right there, because this is a lot of scalpers will just ride the market. They'll get in on this little break above the red bars, and they'll just ride it up to that peak of the previous trend, and then they'll get out. It's called a scalp, and they'll do it with 10 contracts, right? So they'll get in with 10 contracts. They'll go for that little itty bitty tiny move, and then they take all their profit off, and it causes the market to flush down. So those of us who are trying to day trade, not scalp, and take a longer position and look for the market to go farther, will oftentimes get stopped out there because it goes up, touches the previous high, flushes, because those stupid scalpers, now we can be stupid scalpers, get in with 10 contracts, and you can do that too. Be a stupid scalper. That's all right. Nothing wrong with that. I just call them stupid scalpers because I'm trying to catch a trend, trying to get a market that's going for it. It's just not strong enough. Look, it's going to die on us again. It's very disappointing. Okay, push higher, guys. Everybody jump in right now. Buy on that NASDAQ. Let's see it go. Go, 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 go. Russell, mini Russell down there, still trying to push higher. We've just about got our stop move to break even on the mini Russell with those yellow dots. We just needed to stay above the yellow dots. We can be above the yellow dots. We can trail our auto trailing stop. Again, we've turned the trading over to the computer at this point and just let the computer trade. But we're kind of doing a manual intervention, right? Because remember, I grabbed that sell limit order and moved it. Oh, it's going to fail on us. NASDAQ's going to die. Very disappointing. Very disappointing. Come on, guys, push the market button, market orders on that thing. The thing is, we don't have any right now. It doesn't look like there's any institutional traders trading. All we've got is we've got a bunch of small speculators. And when there's just small speculators and there's no institutional trading, the market struggles to trend. Okay, not enough little guys to push it around much. We need some bigger traders to step in and push the market into some trending, into the trend. Okay, we're looking the Dow trying to break above that previous little red bar right there. If we get the first green candle to break a new high. Oh, let's see. Okay, we've got a little bit of movement here on the Russell. Now, there's two schools of thought here. We're only in with one contract. If we went in with multiple contracts, we could, we could play some different strategies. But the market's real weak. I didn't want to take a big risk on jumping in with 10 contracts or 5 contracts or 3 contracts or anything. Dow's starting to fail. That's bad. It means the NASDAQ will probably fail too. We're getting some red bars in there. If it'll break above those red bars and go green again, that would be good because it would be a continuation of the A trend. But we got like 10 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 green bars. Top of 10 green bars, market usually turns and starts to fall. If you just go 10 green bars straight up with no little flag to give us an ABC pattern, market usually goes up 10 and then gets a pretty good pullback. See if we can get some follow through on this thing. Okay, our NASDAQ's moving for us, but our poor little cousin Russell down here decided to die. Went up and touched that previous high and failed. So those are the scalpers coming up there and scalping the market. And so they're taking their profits. And because they started to sell, to take their long position profits out, that causes the market to fall, right? Oliver says he's in the Russell again with me, so we're long the Russell. Looking forward to continue higher. The NASDAQ's making a nice move, so that should pull the S&P up. The S&P just broke above the red bars. We can go long right there. So we're long the S&P as well with a single contract. So we're long with 3 contracts long. 1 in the S&P, 1 in the Russell, 1 in the NASDAQ. Dow's starting to try to go long. We can put 1 in on the Dow too if we want. Try and see if this market's going to continue. Now we're long 4 contracts. It's kind of a dangerous situation, but we're 4 different contracts. We want to see, oh, cousin Russell. Cousin Russell. Don't fail on us, cousin Russell. After all this, come on, guys. My goodness sakes. Don't make me look like a fool in front of a whole class. Come on, guys. Push that baby higher. Push it up there. Push it up there. Nope. Dow died. Failed on us. That's not good for our S&P position. So we're still long the S&P. Hasn't hit our stop order, but where the Dow failed to follow through, that means the S&P is going to be weak as well. NASDAQ, little old cousin Russell down there, he's decided he don't want to do anything either. I'm lazy. I want to go back and watch cartoons in the morning, Saturday morning cartoons. Bring me my hot tea. Come on, guys. Push this baby up there. I don't want to have another red day to start out on. Have to go into recovery mode and come back at 10 o'clock and see if we can get it back. Yeah, we're up a little bit. We got some movement. Oftentimes I'll just go into recovery mode and I'm down $100. It's not that's nothing in these markets. $100 is not even a stop order. But oftentimes I hate to get red, especially now I've got enough green to cover my losses. Can't tell you how many times I'm like, oh, I got my money back, but I'm going to go for a whole lot more, and then end up losing more money again. So I should actually take my profits off the table right now, cover my losses, get small green, and because the market's showing such a weakness right now, take my profits and at least cover my. And now look at that. See, we had our money back. I was just teaching that. Look at that. Okay. That was a perfect example of what I was just saying. Now look, we don't even have enough profit in there. We were up $250. We don't even have enough profit to cover our losses at this point, because I'm like, no, I want more. I'm a greedy little SOB. I want more money. I'm going to let it go. Now, oftentimes that works out. You can let it go, but in my experience, it's better just to get yourself green, make sure you're covered, and then you can get in again. The market's being real weak right now. It's not showing strength at all. So we've got enough money to cover our position. So we're back to, we got all of our losses back, and now we're green on the day. The market's being weak. Now, could it take off and go and we make a whole lot more money? Yeah, that happens. But you got your green back. Now you're not feeling FOMO. You're not feeling down. You're not red. You're not feeling sad on the day. You're like, oh, crap. Of course, you'll feel FOMO if it takes off and goes, and then you would have made more money. But you got your money back. Now you can set up and wait for another flag, wait for another arrow, wait for another opportunity to get into the market, and you can do it again. And at this point, you're not sitting on a red trade. You're not sitting down. How many times have I had this market give me back the money that I lost? I could have taken it, covered my losses, only to go red again and end up with another loser. A million times. So this is a very controversial thing to say, and I know that I shouldn't do it. People tell me, oh, look, see, perfect example. I took the money to cover my red, and now the market's taken off and going long. And had I stayed in, we'd be making a lot more money right now. But, I can't tell you how many times I've got the market's given me all the losses back. I didn't take them in anticipation of a bigger move, and then ended up getting stopped out with a bigger loss, taking the bigger loss. So I've decided for my trading, once I get myself back to the green after taking losses, I'm going to take the profits. I can always set up. We're only into this thing 1 hour on a 7-hour day. We got 7 hours ahead of us of trading. There's going to be plenty more opportunities. If I miss this one, I got myself back to green. I can now wait for a new setup, and I can be good again to go on a new setup where I'm not working from a disadvantage of being red. Okay. So again, I know that's a controversial thing to say, and you guys can do what you want. You can do it however you want. Maybe sometimes you'll feel like sometimes you'll do it, sometimes you won't. Like me. Sometimes I do it, sometimes I don't. I'm leaning towards doing it more often than not. More often, I'll just, once I get myself, if I get red, I bring myself back to green, and then I take the profits, and then I start waiting for another setup and another opportunity. But you can see down here, look at little cousin Russell. If we would have just taken the arrows, and that's the automation that I'm going to show you this week. Again, we're going to get into automation week, and so I'm going to show you how to set up your tonight in the in-person class. I don't want to say the live class because this is live. I mean, we're here live, right? But the in-person class at the university, we're going to talk about Q-OCOs tonight. And so tomorrow in our lab, we're going to come in and I'm going to show you how to set up all of your Q-OCOs. So this is just an introduction to the strategy. So today the strategy is, again, there's lots of different strategies. There's hundreds of different systems that you can trade. But my favorite system is the ATR system with the moving averages. If it's bullish, it's above the moving average. If it's bearish, it's below the moving average. And then we take the arrows, long or short. And then we can ride those dots with the automated system. That's a semi-automatic. Now, on starting Wednesday, Thursday, we're going to go into the autopilot. So those of you who are here, come back. Don't wander off and miss this, because we're going to go in and I'm going to show you how to automate this thing so that all you have to do is click one button. We're going to automate our strategy. Again, there's thousands of strategies. I'm going to show you my favorite one. We're going to put it in there. We're going to turn it on, and we're going to let the autopilot trade. Now, one of the great things about the autopilot, is I like to come in and I like to challenge the autopilot. So I like to turn the autopilot on, maybe the S&P and the Russell, and then maybe even the Dow. Depends on how aggressive the markets are being. So I can be in one or the other. And then I can have the autopilot trading 2 markets, and then I can manually or semi-automatically trade one market, and then I can fully manual trade the other market. So where I got out and took my profits because I was red, this market's still running. I'll bet you guys like Oliver says he was in there. I'll bet Matt's in there. These guys probably smart enough to stay in these markets longer and make these bigger moves. And so this is the difference between scalping and day trading. So I scalped out a little bit of money to cover my losses. I'm back green to 64 bucks. So I'm just back to green. Day trading is taking the longer positions, looking for the market to get into the trend and then stay in there for an hour, 2 hours, if you can, as long as those dots are staying behind the green bar. So if we would have had the autopilot turned on and the autopilot would have been trading on the S&P, for example, it would have got us in right here. It would have put the stop on the yellow dots, and it would have just still been in that market and trailed all the way up. So the difference between scalping and day trading. And so we can set up the autopilot to scalp and trail. So we can do some on scalping, some on trailing. So sometimes the market we want to scalp out of some money. Sometimes we want to trail out some money. So you look at this in hindsight and you're like, man, Land, I could have just bought that arrow, and just stayed into those yellow dots, and I'd be rich, rich, rich beyond my wildest dreams. Yep, you could have done that. Did you? Why not? So they were showing a lot of weakness at first, right? We're having a little bit of struggle. But the autopilot, the computer itself, the AI system, it would have done that because that's how we would have told it to trade. We want to catch the longer term trends, and it would have done that. It would have been in with the autopilot. So again, tomorrow, we're going to start setting up the autopilot. Today, we're giving you an introduction to the fact that this week is going to be automation trading for either scalping or for day trading. And we're going to start turning on the autopilot this week and letting the autopilot trade a couple of markets while we try and trade. We're going to do our own trading on different markets and let the autopilot. We're going to see if we can beat the autopilot. All right. We're going to see if we can beat the autopilot. And that's the name of the game. We can eventually just turn the autopilot on all 4 markets and just trade our strategy and let it run and go eat eggs and drink coffee. Who cares? Right. But if we want to trade, we can try and beat the autopilot. It's kind of a fun game. See if you can beat the autopilot. All right, guys, I'm going to let you go for the day. We're at least closed out green. We're not red on the day, and that's a win for me. But you can see how good our system's working right now down here on little cousin Russell, just following the yellow dots and the yellow arrows. And whoa, look at how that Dow's taken off. We were right to get in on there. We just scalped out enough to cover our losses, but now that market's taken off. That's a perfect example of what I was talking about. Should you stay in? Should you get out? Should you scalp and get yourself back red? You can always get back in again. The argument against doing that is that sometimes you did it right and you could have been in this market making a whole lot of money. C'est la vie. That's the way that's trading. Be very conservative and just stay green, or you can get aggressive and look for these bigger moves. I'm having a really bad FOMO right now. But that's all right. We got the rest of the week, and we're going to start turning on automation, and we're going to let the computer help us make some of these decisions. See if the computer can't make better decisions for us than what we make on our own, and that's the name of the game. Okay, guys, real quick before I let you go for the day, Pit News Magazine. We're getting ready to drop the new issue. Starts in a couple weeks. We're working on it. It's almost done. And so I want you guys all to have Pit News Magazine, because this is where I go through and document all of these strategies. Me and a bunch of guys from our President's Club, we all write these articles. Plus, we got a staff of people who write articles, and we're all writing about trading. It's all about trading. So it's a really cool magazine. We'd like you guys to subscribe. You can get a full year subscription for $1. Just use that code right down there, LandLive-$1, and you can get a full year subscription to Pit News Magazine, where we're going to line out what all of these strategies are, and you have them as notes for yourself. And I would really like you guys to be a part of that. That's where I kind of share my strategies with you and all the stuff that we're talking about here in this class. You're like, I wish I could have this written down somewhere. Well, that's where I write it down, in Pit News Magazine. So run and pick that up. And boy, look at these markets. Beautiful, beautiful, beautiful. The autopilot would have just killed it today. And I'm glad. I'm really excited and anxious to teach you guys about the autopilot. We're going to have a really good trading experiences with the autopilot, and that's coming up this week. So we'll catch you tomorrow morning, 7:25. Be here or be square.